All right, and welcome back for another episode of Carnivore Trades. Today is Tuesday, May 3rd, 2022. So spiders here really painfully sideways today. Really just a chop fest across the board. It looked like we had a chance to move up, so we kind of gapped up a little bit, faded, and then looked like we wanted to rally here. And then we got a bid, and then really just couldn't get through that 200 moving average there on the 10-minute. And really just kind of chopping sideways. So no trend day, no mega rally here pre-FOMC like we got in March. And this does sour me a little bit here on the chances of a rally, or at least it sours me on the chances of a sustained or a significant sized rally here for the markets. And I'll explain why. So last time we had the FOMC, the market, again, as we know, it took off on Tuesday. We had a gap up and it was a gap and go. We had a trend day. It just ripped higher. And that really shifted the control of short term of the market from the bears to the bulls. And, into the close that day, you got the sense that the bears were kind of like, okay, should we even, do we want to hold short going into this FOMC, given that we just got threatened with this rally? Right now, the bears are completely comfortable. They're not scared at all. I mean, if we had ripped up to 422, 423 on the spiders, they probably would be scared going into the close. And they'd say, okay, maybe we should take some profits here and let's, book it and we'll deal with it later. We'll, figure it out later. But we're not going to expose ourselves. Now, right now, they have nothing to fear because this little short covering that happened yesterday into the close and the little micro rally that we've gotten today, I mean, we're barely even positive. So I wouldn't even call it a rally. Qs are negative. That was just, basically upside hedging. To me, that's what that looks like, which means that if, let's say the market rallies 20 points, the ES rallies 20 points off of the FOMC, they can take those hedges right off and short this market right back down. There's really nothing to say they can't do that. It's not like they got really squeezed here. They did nothing really, they're not hurting for any, there's no reason that they're in any sort of pain here. So that says to me the bears can slap those shorts right back on and they can push this market lower. Now, that said, I still think the preferred scenario, or at least the most likely scenario, is we do get a rally. For several reasons, many of them which I've already listed out, that there's no bulls left in the market. There's a ton of bears. We're already really oversold going into the FOMC. You got this broadening channel kind of trend line that we hit, a good bottoming tail yesterday with good volumes. There's lots of reasons that we could still rally. Just a little bit soured here overall. And overall for the markets, I guess I would call it kind of an indecision day here. So looks like we're going to put in sort of a spinning top there on the spiders. So kind of a doji-ish kind of candle. Triple Q, same thing. Nice little doji there on the dailies. We basically scraped the flat line right now with about 13 minutes left in the trading day. Now the positives here are, first one, from technical standpoints anyway, the positives here is the Russell 2000 is still up almost 1% here on the day. And that's with all the chop here. So I like it when I see the small caps performing well. And so the small caps are up greater than any index out of the four major indices right now. So they're outperforming, and that's generally a good sign moving forward. Now, they still are inside this red bar here. So 191.73 until you get a daily close above that. This is still in a very weak technical position, but on a relative basis, nothing wrong when you see that. The other positive from a technical standpoint, and this is a big one, is the semiconductors. So, depending on where you draw this trend line, if you wanted to, maybe somebody wants to draw it like right here. Either way you draw it, you connect these highs here, you basically have a potential breakout there on the semis of a falling wedge pattern. And we know falling wedge patterns are bullish reversals. And again, given how oversold the market is, if this is a breakout, if we get a gap up tomorrow, especially if you gap up above that 20 moving average and it holds, the market's not going to sell off. We will rally. I can almost promise everybody that. So the semiconductors are in a very good position right now. And that is a major positive for the market and for tech specifically, obviously. The last major positive is now there's whispers that bears are now kind of expecting a 75 basis point hike. So right at the highs of the day here at about 1:30 p.m., some members of JP Morgan came out and said that basically, oh, there's a 1 in 5 chance now that the hawks like Bullard will convince the rest of the FOMC colleagues that we should hike by 75 basis points instead of 50. And we got an algo sell-off from that. So that just, to me, screams shenanigans, honestly. But there is that a little extra expectation now. So if that doesn't happen, that could cause more short covering, obviously. So there is that to consider. Another positive here, lastly, is the VIX. So VIX got pretty much monkey hammered today, down 7%. And you can see, UVXY here was weak all day long. So it does appear like there was some hedging coming off, even though the market was flattish. You'd think that the VIX would at least be holding up with a flat market here going into the most important announcement since, who knows when the last, this is a very important announcement. I mean, we're talking about a 50 basis point hike that hasn't happened in decades. So big announcement, and, VIX getting slammed ahead of that is a little suspicious unless somebody knows something. So just a couple of things here I want to present to the table here. Anyways, let's take a look at the diamond here. So diamond overall, nice tail candle yesterday. A little doji, just like the rest of the markets here. It's holding up for now, so nothing too new to report there. We talked about the Russell inside of that red bar there, but having a nice day, is up 75 basis points still with about 10 minutes to go. Triple Qs here down 1/4 point. So, overall, it's hanging in there, a little doji going on. And again, this red bar high is going to be your resistance. If you get daily close above that, next stop is probably that 50 moving average. So that's going to be the levels there on the indices. So moving over to rates here. So rates did gap down a little bit, but they recovered by the end of the day. So yesterday we talked about, we got to 3% area. We did crack just above it, so 30.02 on the TNX. But yield curve didn't really invert as far as 2s and 10s. So this may have a little bit farther to go. But again, I still think we're in a position where the yields are just so overbought going into this, basically, like I said, historical announcement here for the Fed. It just seems like a recipe for disaster or success, depending on which way you want to look at it. But in any case, that's what yields did today. TYX, same kind of deal, down 1.8%. So really kind of par for the course. HYG, here's another little positive. So up almost 0.5% here. And it did erase all of yesterday's losses today. So we're about to close here in about 6-7 minutes. And, it erased all of yesterday's losses. So, I mean, that's a positive there. If high yield can get a bid, especially if it gaps up tomorrow. Watch this in the morning, too. If it starts gapping and going tomorrow, it could be a major leading indicator for us. Moving into the FOMC, IGV did have a reasonably par for the course day as far as tech is concerned, down 1%, but that's not a big move for the IGV, just still staying inside of yesterday's candle. Dow Transports here, decent day, again, still inside of this big red bar here, but it did have a little bit of follow through. The Dow Transports have been holding up much better than some of the other sectors, though, notably. XHB, home builders, basically still inside of this red bar, but again, getting a nice bid. And yesterday they were green as well, with rates pushing higher to above 3%. So this could be telling us that this is seeing a little bit of money flow right here in the short term. I still think these have a lot more downside over the next several months, but for the near term, they are showing a little bit of signs of good strength, even with, this is a bearish pattern. Let's not make it anything else, right? It's down move and moving sideways, but it's making higher lows right now with yields touching 3%. So maybe a little bit of a divergence here. Maybe they're a little low on the chart. Maybe they're due for a snapback rally. So we'll watch that here moving forward. And we'll just leave it at that. VNQ, nice little rebound today from that absolute beatdown over the last 2 weeks here. Again, held that green bar low and held this white trend line here. It goes back to last year. So a pretty nice little recovery there for VNQ, but it did take a pretty big hit there. All right. So let's talk about fins. So XLF, one of the leading sectors today. So up 1.59% currently is the XLF. So a nice move. It is getting rejected at this trend line here, still inside of this red bar, but nice to see follow through with financials, with bond yields down. So that's, generally a good sign. Broker dealers also. There we go. Broker dealers moving up as well. So a little bit of follow through, up 0.5%. Looks like that falling wedge pattern is giving it some support here in the short term. Obviously, we'll have to see tomorrow for follow through again. Crude. So crude red today. Again, I've been talking about this. It's really got to make a higher high here before I can really say that it's going to even come up here to challenge this 115, 116 area. But for right now, you've got lower lows. So this trend line here is acting as resistance. It had a nice reversal off the lows yesterday, but selling right back off today. So crude, you know, again, to me, it looks like it really wants to break this 95 area. And I keep saying it, but, you know, I think it's got to go down to 85, and that's going to be a really good buying area down there. XLE did get a nice bid today. So that was mainly off the back of BP. BP reported earnings, and BP smashed. They are up almost 8% here today. It's going to have a lot of resistance up at this, just under that 32 handle and right above it. So I don't know if it can get above that in the near term. There's a ton of resistance up here, but a nice move for BP in the short term, and that is helping XLE. XOP also getting a sympathy bid there, as is OIH. So a nice day there for energy, and that's a big reason why the spiders are green and the triple Qs are not, as energy makes up a lot more of the S&P than it does the NASDAQ. Nat gas making new 52-week highs today. Did basically pierce, just pierce through that all-time high, 52-week high here. And high of the day was all the way up at, let's see, 816, so 817, we'll say. And then did pull back off the highs. We'll see what kind of pattern we get. May enter a KOLD position again for another quick play, but it's got to give me the right setup here. But overall, nice little move there for Natty. Dollar index continuing to go sideways. So it does look like a kind of, it is starting to flag up a little bit here. It is holding inside of this green bar. The one thing I will say, and for those of you who have taken my course, know that these bull flags, when they're at extreme highs, have the tendency to fail very often. So we'll see what happens here. Again, the dollar is very high on the hog. We're going into a historic Fed meeting. So we'll see what kind of reaction we get tomorrow. But dollar index holding up today, and we'll just leave it at that. Gold able to bounce off the lows, so it is holding the flat line. A little bit of a doji candle. Again, the FOMC always seems to move gold, so we'll see what kind of reaction we get tomorrow. GDX also bouncing a little bit. I still think 32 is going to be the better level to buy it at. And silver just cannot catch a break here. It is flattish here, but I mean, just monumental. 1, 2, 3, 4, 5, 6, 7, 8, 9 days in a row down. And then you could say, you know, 10, 11, 12. So 10 out of the last 12 days, it is red. So pretty rough going here for silver. It is very oversold, due for a bounce. We'll see if it can maybe get a lift off of the FOMC statement, but what a sell-off there on silver. Platinum did get a little bit of a bid, but still inside of this red bar. And palladium also bidding up 1.85% too, but still inside of this red bar as well. Copper here, getting a bid. Really kind of an inverted doji there. Maybe it is, you know, it's a little oversold short term, so we'll see what it does. But I don't see anything too spectacular there on copper. All right, so flipping over to Bitcoin here. So Bitcoin, another kind of weak session. So really threatening the lows from the first, so that would be Sunday. And, you know, it's trying to hold up here, but it's just in a very weak technical position. And when I zoom out here on the charts, I don't really see any help from the weekly. You know, you close below this green bar, you know, it's just kind of drifting lower. I don't see any help from the monthly. So, I mean, you kind of got this inside bar pattern here on Bitcoin. So not a good look. And again, the FOMC can change everything. Maybe it can get a bid. It will get a bid if the market does rally, most likely, more likely than not. As a matter of fact, same thing with Ether and really all the cryptos. But, you know, Ether in a little bit better of a technical position. It's much farther off of the lows from Sunday than Bitcoin is. But overall, just not a great looking pattern here. You know, had this inside bar here, and it started to play out, and you know, haven't been able, you know, had another one here, faded that rally, and just really kind of just been chopping sideways to lower since. And it's not really terribly oversold either. So, you know, it's kind of just drifting sideways to lower. I think it still wants to go down and test that 32 to 34,000 area. But again, historic rally, or excuse me, historic FOMC tomorrow, which could cause a historic rally, who knows? That can change everything. Anyways, market's about to close here, so looks like we're getting a little bit of a buy program into the close. Maybe some short covering going on. No, it doesn't look too major here. Spider's up 0.5%. Q's now green here. VIX, ooh, look at that big slam there on UVXY. All right, so it looks like somebody's dumping the VIX here. We'll see if that translates tomorrow. We'll see if we get that gap up that we were kind of looking for today. All right, guys, I'm going to wrap it up here. Be sure to stay tuned for tomorrow's videos. I'm going to be totally overwhelmed with information with the FOMC. Very important to check that out. Anyways, guys, come find me on carnivoretrades.com. Take care, and I'll talk to you all tomorrow.